We were talking to a guest earlier who was talking about UK assets as a haven. I know your team has been writing about that theme with investors. And in fact, Rachel Reeves, the Chancellor, has tried to pitch the UK as something of a haven of stability in amongst a sea of uncertainty politically. What are we seeing in the pound then? And how does that fit into that picture?
Yeah, well, it seems like that pitch is very much working from a pound perspective. We've really seen the pound going on the most incredible run this year. It is beating 92% of other currencies around the world, which is really, really crazy when you think about it. All of that, of course, beating the G10 as a result. Including the dollar. So I think when you kind of look at what the causes of that are, there is an aspect whereby, you know, the incoming Labour government is projecting this sense of stability, is projecting this sense of calm, particularly when you compare it with some of the UK's sort of most, I guess, kind of interesting peers. France, obviously, just on the other side of the channel, clearly been kind of caught up in a lot of political chaos recently. The US also having some interesting political developments. So the UK is very much kind of sort of standing out, therefore, as something that is calm. But I think the bigger picture sort of beyond that political aspect is really very important, which is that the Bank of England is likely to remain on hold for longer than the Federal Reserve. And that's what we're seeing kind of, you know, traders sort of pricing for at the moment. There's really very little chance that we'll see a cut in August. It's about 30% priced by traders at the moment. So we're looking at kind of September or even November for that cut. And that's something that is very supportive of the pound. So we saw it hit sort of a one-year high last week, and we've seen bets on further pound strength really continuing to grow. That, however, has me slightly worried. Whenever you see everyone piling into one trade, there is a risk that things start to look rather crowded, look rather stretched. And given we now have record bets, you know, on sterling to continue to gain, that's a point of some. It's worth watching, shall we say?
Well, let's talk about the other side of that trade, which of course is going to be the dollar. Is the dollar positioning story relevant this early ahead of the election, or is that something that's in the back burner?
I think it is relevant, and I think, you know, there's been a lot of conversation about whether, you know, sort of the election is a dollar positive or dollar negative trade, and I think that's going to depend a bit on who ultimately takes the presidency. Given we have uncertainty kind of going into the November elections, buying dollar has kind of been a very sort of popular haven-esque trade. When we actually get past the election, it depends on who comes out as the winner. Trump has obviously made some quite concerning comments for markets about whether he's going to continue pursuing a strong dollar policy, potentially leading to weaker dollar. But his policies that he's actually been talking about are much more inflationary, which would typically be a sort of stronger dollar vibe.
And just briefly, Rachel, do tech earnings, that's going to be the big focus in the next 24 hours?
Yeah, we've got Tesla reporting, we've got Alphabet reporting. Given we had a lot of issues with tech stocks last week, S&P 500, there's a lot of doubt about whether it can continue to keep powering higher. I think everyone's going to be watching to see kind of how Tesla and Alphabet really come in.